Hello, I'm David French, President and CEO of Bankers Petroleum. 2014 was another remarkable year for Bankers, even with the challenges of oil markets in the second half of the year. We achieved several key milestones through a commitment to our three-part strategy: manufacture consistent and low-cost primary horizontal wells, expand our margin through targeted investments in our surface facilities, and validate enhanced oil recovery potential through field testing of polymer and water flooding. Bankers achieved 14% production growth this past year with an average production of 20,690 barrels a day and drilled a record 160 wells. That's a 10% increase over the previous year with the addition of our 6th drilling rig last March. Over the year, our team took nearly $3 a barrel out of our operating and sales and transportation costs by focusing our capital on high-impact projects. These efforts will continue, and we expect to realize an additional savings of $2 to $3 a barrel over the coming years, an important initiative that allows the company to stretch the value of every dollar we spend. We expanded our enhanced oil recovery program by converting an additional 14 wells to injection, ending the year with 23 patterns underway. By year-end, over 10% of our total production was under pressure support from the EOR program, resulting in over 1,300 barrels a day of incremental production. These positive results were recognized by our reserve auditors for the first time this year, with a conservative booking of only 76 patterns, or 8.6 million barrels on a 1P basis, and 11.3 million barrels on a 2P basis in the 2014 reserve report. This is a foothold booking that provides ample running room and reserve growth potential as we accelerate our EOR program to become a focal point of our development strategy going forward. In the second half of 2014, Bankers demonstrated its operational flexibility by reducing our rig count to protect the business against a fall in oil price. The ability to quickly reduce our costs in combination with our hedging program gave us a soft landing at these lower prices. The company maintains a strong balance sheet with a cash position of over $70 million and cash operating margins inclusive of the hedge of over $20 a barrel, even at $50 Brent. Bankers is well positioned to make the most of the tougher commodity world we're given with a fully funded 2015 capital program of $153 million. Because we hold 100% rights to the concessions we operate, we have always controlled our pace and scale. But this is the year we lengthen our stride. Even though our primary drilling activity has been reduced to an estimated 60 horizontal wells, we have efforts underway to shave our cost per well by 15%. Built upon the back of a highly successful 2014 EOR program, the capital allocated to EOR has increased nearly 30%, with 20 planned conversions. We also push our technology forward by further testing and multilateral development and extend our understanding of deeper oil horizons, visible now through our 2014 3D seismic program, the first ever in Albania. Lastly, we are working initiatives across the board to reduce inventories, accelerate operating cost savings, and make every dollar count. It's no secret that the current price environment presents challenges, but we are excited about the work ahead of us and optimistic about the bright future of the company. The decisions we have made as a company prepared us not only to withstand this downturn, but launch us forward as we see movement in commodity price. Bankers is working harder every day to lengthen our stride, creating value for our shareholders, our employees, and for the country of Albania. Thank you for your time.